Oil pairs weekly loss as OPEC Plus repeats that hike is conditional. Bloomberg, oil futures have paired their weekly losses after some members of OPEC Plus reiterated that their plan to revive halted supplies is contingent on market conditions. Key points. Market conditions. OPEC Plus members emphasized that any increase in oil production would depend on current market conditions, potentially pausing or reversing planned hikes if necessary. Price movement. Brent crude futures are trading near $80 a barrel, recovering from a 4-month low earlier in the week. This rebound follows the assurance from Saudi Energy Minister Prince Abdulaziz bin Salman that production adjustments will be flexible. Analyst insights. John Evans from PVM Oil Associates highlighted the strategic timing of OPEC Plus' statements, suggesting a concerted effort to stabilize the market. Mixed reactions. Wall Street has shown mixed reactions to the plan. JP Chase and Company questions its bearish impact due to some members already exceeding quotas, while Citigroup Incorporated anticipates that full production cuts might continue into the next year. Geopolitical concerns. Despite a downward trend in oil prices since April, ongoing geopolitical tensions in Ukraine and the Middle East pose risks that could drive prices higher. For further insights and updates, you can subscribe to Bloomberg's Energy Daily Newsletter. More long. ChatGPT. Oil pairs weekly loss as OPEC Plus repeats that hike is conditional. Bloomberg. Oil futures managed to pair their weekly losses after some members of OPEC Plus reiterated that their plan to revive halted supplies is contingent on market conditions. This development comes amid a backdrop of fluctuating oil prices and mixed market sentiments. Key developments and market reactions. Market conditions and OPEC Plus strategy. OPEC Plus, a coalition of oil-producing nations led by Saudi Arabia and Russia, has been closely monitoring global oil markets to determine the appropriate level of production. Recently, the group announced plans to gradually resume production that was halted during the pandemic. However, Saudi Energy Minister Prince Abdulaziz bin Salman emphasized that this plan is not set in stone. He assured markets that OPEC Plus is prepared to pause or reverse the planned production hikes if market conditions do not support increased supply. Brent crude recovery. Brent crude futures, a key benchmark for global oil prices, were trading near $80 a barrel as of the latest updates. This marks a recovery from a 4-month low struck earlier in the week. The rebound was influenced by OPEC Plus' reaffirmation of their flexible approach to managing oil supply, which helped to stabilize market sentiments. Analyst insights. John Evans, an analyst at PVM Oil Associates Limited, noted that OPEC Plus members embarked on a coordinated effort to reassure the market, deploying high-profile figures to communicate their message of flexibility. Evans described this intervention as well-timed and effective in calming market concerns. Wall Street's mixed reactions. The reaction from Wall Street has been varied. JP Chase and Company expressed skepticism about the bearish impact of the production hike, pointing out that many OPEC Plus members are already producing above their assigned quotas. On the other hand, Citigroup Incorporated predicts that full production cuts might be maintained into next year, suggesting a more cautious approach. Broader market context. Recent price trends. Oil prices have been trending lower since early April, driven by concerns over the global demand outlook. Factors such as economic slowdowns in key markets and uncertainties around the recovery from the COVID-19 pandemic have contributed to this downward trend. Geopolitical risks. Despite the recent decline in prices, geopolitical risks remain a significant factor in the oil market. The ongoing conflict in Ukraine and persistent tensions in the Middle East could potentially disrupt supply and lead to price spikes. These risks add an element of unpredictability to the market, making it crucial for OPEC Plus to remain adaptable in their production strategy. Conclusion. OPEC Plus' recent statements underscore the group's commitment to responding dynamically to market conditions. By maintaining a flexible approach to production hikes, they aim to stabilize the market and prevent excessive volatility. As the global economic landscape continues to evolve, the actions and communications of OPEC Plus will be closely watched by market participants. For ongoing updates and detailed analysis, consider subscribing to Bloomberg's Energy Daily Newsletter. This resource provides in-depth coverage of the latest developments in the energy sector, ensuring you stay informed about the factors shaping the global oil market. Most read from Bloomberg. Real estate investors are wiped out in bets fueled by Wall Street loans. Behind Suicide Squad, the year's biggest video game flop. Vietnam tycoon sentenced to death faces new charges. Media. Billionaire-friendly Modi humbled by Indians who make $4 a day. A struggling business park deals a blow to Singapore's regional hub ambitions. For more articles and insights, visit Bloomberg's website.